Welcome to Project Finance Storytelling with me, Hedieh. Today's episode is about the one who balances the balance sheet. So today's story is about Imani, and through this story, my aim is to convey the message to you that why it is important to include a balance sheet even in a project finance deal, that basically we do not use the balance sheet for any kind of ratio calculation, and none of the covenants and CPs are based on the balance sheet. However, it is always useful to include a balance sheet because having a balance sheet that balances is an indication that the model mechanics are done properly. Let me say it's another indication because there should be other checks as well built into the financial model. The second thing that I want to basically show you through this story is how to make a balance sheet that is not balancing to balance. And there are different techniques that I will show you through this story. Let's go and listen to Imani's story. Imani has been working on building a financial model for a toll bridge project for almost a week now. The only thing left to build is the balance sheet. It's a project finance deal, so she's not doing any ratio calculation based on balance sheet. However, she knows that she can't get away with not building it. Also, it's a good way to check the model. A balance sheet that balances is another indication that the model mechanics and links are done properly. Every time she builds a balance sheet, she has hope that maybe this time she will get a balance sheet that balances in the first go. So with that in mind, she builds the asset, liabilities, and equity account and builds the check for whether the total asset equals total liabilities in each model period. And it fails. She's too tired and it's already 7 p.m. She will take care of it tomorrow morning with a clear head. Next day, she starts the day by going for a walk in the park. She thinks to herself, it's a very good day. Indeed, it's a great day. With that mindset, she goes to her office, make herself a cup of coffee, and get back to her model. She has done this exercise many times before, so she has come up with a system. First, if the issue rises during construction, meaning that there is a difference in assets and liabilities during construction in the balance sheet, then it should be straightforward, because she has already checked for another statement that covers the construction, which is the sources and uses of funds. So, if the sources and uses of fund is matching, then the issue with the balance sheet not balancing might be because of a cost or a financing instrument is not linked in either the P&L or cash flow statement. So she checks and goes through all the uses of funds item during construction, and indeed there is an imbalance during construction. Next step is to trace where the problem is coming from. She checks the sum total of the imbalance and see whether she can locate this amount in the project cost. She checks and indeed the problem comes from financing fees. The total amount of imbalance is equal to total financing fees payable during construction. She checks and indeed she forgot to include the financing fees in the cash flow waterfall statement. She includes it and the problem is solved for the first model period. But there is still an imbalance in the second and last construction period. She again tries to trace the amount and see if she can find the same amount in the P&L or cash flow statement. She realizes that the amount is exactly equal to the pre-funding of the debt service reserve account. So she tries to understand the logic. DSRA is included as a current asset and the pre-funding of it is included in the debt or equity balance as a liability. So there must be a double counting in the assets for the pre-funding of the debt service reserve account. So most probably it is included in the total fixed asset and that is the double counting. She goes to the tax and accounting sheet and sees that indeed pre-funding of debt service reserve account is included in the calculation of total asset. She fixes it and the imbalance is gone in the balance sheet for the construction phase. Now she needs to deal with the operation phase. What she's going to do as a first step is to switch on and off what she thinks is causing the imbalance and see if the problem is solved. She's going to put the debt to zero and see if the issue is somehow related to the modeling of the debt tranche. She puts the gearing to zero and runs the macro, and the problem persists, so it's not the debt. She has a parameter to set the drawdown priority on debt and equity facility during construction. She sets the upfront equity drawdown to zero, meaning that she enforces a pro rata drawdown on facilities, and see if this is sorting out the problem. No, that's not it either. She puts all parameters related to debt service reserve account to zero and see if without debt service reserve account, if the imbalance still remains. And yes, the problem has nothing to do with debt service reserve account. She does the same thing with tax and puts all taxes to zero, and the problem is not taxes either. So, last thing, she sets the working capital requirement to zero and runs the macro. And yes, that's it. The problem comes from working capital. Something is wrong in either account receivable, account payable, OPEX, revenues, or combination of them. So she checks her revenue calculation. It seems all okay. She checks OPEX and accounts payable calculation, and they all seems fine. So what is it? After a lot of digging and after a coffee break, she realizes that she made a mistake when linking the cash received in the cash flow statement. So the account receivables are not taken into consideration in the cash flow waterfall, and therefore the balance sheet picks it up. She fixes the issue and the balance sheet is balancing. Bravo! Well done, Imani! So I hope you like this story. If you like such a content, please consider subscribing to my channel. Thank you and hope to see you in my next video. Bye. If you want to learn how to build better financial models, check out my online course on financial model spreadsheet design at courses.phoenixmode.com.